Hello, Bitcoin aficionados. Mike here on Sunday morning, and I thought I'd chime in and tell you what's going on, so you don't have to. And yeah, it's looking interesting, right? I want to do a little follow up on yesterday's video that I posted when everyone was running around with their hair on fire, screaming. And I hope I served you guys to kind of keep you calm and relax and hopefully load up on a little bit more Bitcoin, because so far it's looking pretty good. But of course, and I'm always straightforward with you guys when far from being out of the woods. But let's talk about this. So what we're looking at right now here is the attempt to form a floor, and this is in general considered, technically speaking, if you forget about indicators and everything, you just focus on price action. This is considered very positive because obviously this represents a snapback, where here there's certain amount of capitulation. Pardon me. I'm just on my second cup of coffee here. Thank you. And I just basically fell out of bed, so forgive me if Mr. Dictionary abandoned me again. So I don't know, some people love to draw lines. I'm always very careful because, come on, there's almost no context here, right? Where you're going to hook this thing up. And lines are really more imaginary anyway. So for whatever reason, it bounced here. And actually, I do have a suspicion of why that happened, somewhere in that range here. And if you kind of like think a little bit more long term, right, you can see that there is some context, some context, okay? And it somehow found a flow here, whatever reason, we shall never know. The leveraging succeeded, and now we're back here, and so we're now in this this thing always adjusts, right? This linreg, this linear regression channel, and honestly, the reason why I'm actually still showing that channel is because I couldn't freaking figure out how to turn the channel off. I just want to show the line, but obviously the slope is down, and it's going to take quite a bit of work to get it to straighten out again. Now, that's going to take weeks. Think about it. What price action is going to have to paint so that we actually straighten this out. So just given that, you have to think, okay, the energy required to turn this if you can think in this like a little bit of an oil tanker, right? And to turn this thing around, it's going to take some energy to do that, because it took quite a bit of energy to drop it. And this is only 20 days. No matter what you use, it's gonna take 20 days even to straighten it, or even just get back to here where it just forms like a straight line, right? A horizontal line. It's always straight, but horizontal, and then back up more vertical towards the positive side, right? So, okay. Let's start screwing around and kind of talk about a little bit about how this might play out. In our fantasy, it would be something like boom, right? Yeah, that's not going to happen. What we're going to looking at is probably a few, until Christmas, probably some pain. We might get faked out again, where we see something like this. This is a scenario B, bullish scenario B, which I think has the highest probability. And it's doing something like this, and then, some retests. And what it's going to do probably is try to, in around this region, establish more context. Because look at this here. There isn't much context here. And that's always the danger when you have these explosive growths. And that's one of the reasons, and you might remember this from the webinars that I filmed in May and June. Technical analysis on this, especially involving indicators on other measures, is extremely difficult, and it's very difficult to build a system around it. And that's why we use other measures, and we're going to talk about this in a second. But like just reading the price action from the experience I have, 2 decades of reading price action, over 2 decades actually. So this is something where I can glean certain hints, but we have to be very careful. Okay, just as a disclaimer, because crypto moves in spurts. It does that because it is a manic market. Manic market. Should make a song about that. It's really how crypto moves, and it's probably going to keep moving for quite a while to come. We're still in the early phase, right? Now it has changed. I mentioned on that. I talked about that yesterday. the entire market capitalization of the entire crypto market was, I think, stood at around, what was that? I think $180 billion. That was the entire market capitalization of the crypto market. And now it's around 2.8 plus trillion. Trillion with a T, right? And so I think about that really changes the nature of the market. And we have derivatives now, we got futures, we got options, even options trading. That's going to be fun. Can't wait to get into that. And that changes the nature of the market a little bit. But I think the volatility is still there, and that's mostly driven by the greed and by the mentality. The manic. There's a lot of writing on it. A lot of people also, and think about it. We older dudes and gals, we kind of riding along here. In the younger generation, and I'm like over 50, right? But the younger kids, everyone below me is kids, So you kids, if you're listening, a lot of them, I mean, some we've got some millennials and even Z, what is that, Z Gen, and who knows what, Y Gen, and some of these kids, they're holding quite a bit of crypto, just kind of fell into it. And when I kind of peruse Reddit and other watering holes where they hang out and tell each other stories and trying to make sense of it all, it's a very different mentality, and they have some of them don't even drive a car. I'm serious. They're holding crypto. They might be holding several $100,000 in crypto, but they don't drive a car. They live at home with their parents still. So it's really strange, and well, strange from my perspective, right? Because that's for me. I mean, when I was younger, you had to have a car. Right? So anyway, it's a different mentality, and for them, they're really in it for the long run. And they're different than us. A lot of them don't even trade it. Right? So it's us older dudes who are playing the swing set quite a lot. And I don't, when I look at my own subscriber base, right, people who sign up for Cryptonaissance who are trading, I can tell you there's a lot of gray hair, right? Seriously. And my people my age, sometimes older, and sometimes maybe 10 years younger, but honestly, I haven't really talked to too many people who were below like 35. Actually, I don't think I can remember a single one. Now, that might be related to price tag as well, because I mean, people all paid a few grand to get into this. But it's that there's more to that. There's more to that because I do get a good sense of generational dynamics, and the trading happens. Is one thing. So that's one generational dynamics, and there's a large subscriber base, base of like amount of people who are holding crypto, who are young. They just, that some have only a few $100, and some got lucky and bought it many years ago, and they're holding tens of thousands, hundreds of thousands, and some of them a few million. And those, they don't trade, they don't care, they just hodl, right? They might jump in and out here, that one altcoin or the other, right? But with more spare change. But some of them really are hodling, most of them actually hodling, and just kind of like going with the swings, and that's very different. So slowly, the dynamics are changing in the market because more and more, and forgive me for saying that, I use that word, the grown-ups are coming in. I'm not meaning this in a disparaging way. What I mean is we older dudes are coming in, and Wall Street's, it's basically picking up a lot now. And I mean, look, what was that? A lot of ETFs are holding huge amount of Bitcoin now, and they keep accumulating. And countries are going into the mix, San Salvador, and et cetera, right? So what we're looking at here is a change in dynamics over time, but the volatility seems to still be with us. Anyway, let's move on here and look at more price action, because really, as I said, the volatility will stay with us, and certain amount of price action, that's just how things play out, because human psychology doesn't change, and I think the mentality of the people who are driving this type of this price action, there are a lot of them are traders from traditional markets, and that's why I think that's why we see similar patterns, right? That's why we see stuff like this here, which is quite This is actually quite textbook if you believe it. You know, right here, if you're looking at this section here, right, goes up, and then this sudden drop scares the children, comes back down. You know, that's the kind of zigzags here, and then this is really the acceleration point, right, where everyone really starts taking off, and it just takes off. That's quite normal, right? Or if you want, right here. So it's like this retest variation pattern, right? Retest variation long, where it basically retests down here, and then that's what we want to see, right? That's something else what we want to see over here, probably. There's only one problem with it. It's much deeper. And so let's, if you're looking at this side of the chart here, direct your attention to the left side of the room, please. Here, oops, drawing tool never works when I want it. This shit, right? So what are we looking here? This is what we can expect, and I'm brutally honest with you guys, right? This is probably what we're gonna see. You know, that's why I'm not like, okay, if you think here maybe, you know, damn it, I didn't buy it at 44. You might still get a chance. Yeah, this is just, and please don't go and start dumping all your crypto now because you think it's gonna drop more. It's just, we're gonna have to sit this out because nobody has a crystal ball, and I don't want you to kind of tar me, feather me, and carry me out of town on a rail if we're like punching up to 60,000 by tomorrow. Okay, but look at this, right? I mean, this is mind numbing, right? And it even faked us out here once, right, where it breached below, right? And this is something you can easily expect. And then boom, right? It just all of a sudden switches back, and it's like, okay, we're done, you know. And this is what we don't have here yet. There's something we don't have yet. But this is the type of price action. That's why I went on my long tirade about generational blah blah blah. This is just the typical price action, human psychology, and the people who are trading it. You know, the hodlers don't do that. They don't. They're just holding. So it's us, you know, the traders. It's the guys in funds, and Wall Street got into the mix, of course, and there's maybe a few more people trading crypto now these days, where derivatives and everything. But this is the type of price action that's been driven by that. You know, it's trying to find a floor. It's trying to figure out what it's going to do. Nothing to do with the news at all. You know, nothing to do with the news at all. I mean, there was no China involved this time. It's just, you know, this time it's to do, you know, to deleveraging of whatever. We were leveraged here too. You know, it happens. These things happen. They will happen again. And if you're trading crypto, you should expect these things to happen. You need. This is, you know, it's gonna test your metal, you know, repeatedly. All right, moving on. So there are good news to report, though, and you wouldn't believe it, because let's look at Ethereum USDT. Okay. And what do you know? What do you know? You know, if you were actually holding, if you were actually trading Cryptonaissance, and I hope you do. If not, then shame on you, and you should sign up. You know where to find me. Then we wiped out and we came right back, and we're basically where we are. Well, let's say, okay, today's Sunday, right? We roll over tonight again. So it's 1, 2, 3, 4, 5, 6, 7. Okay, we're still down for the week, right? We bought it here, and we're down a tiny bit. I'd say 5% or so, 10% maybe. I don't know. It's deceptive. It's probably 10%, but I mean, come on. I mean, nothing, right? Nothing compared with Bitcoin. So if you're holding Ethereum, which you should have, if you were a Cryptonaissance trader, then good on you. Congratulations, because you were one of the lucky ones. You set this out, and yeah, there's a little bit damage, but come on, nothing. And now you want to see the really good news. Okay, here's your Christmas present, courtesy of Michael. Check this out. Because think about this again, right? On a long-term basis, what do we care about? We care about earning Bitcoin. That's really the prime directive of what we're doing here, right? That's why we're trading Cryptonaissance. The prime directive of what we're doing is to accumulate as much Bitcoin as possible. And this is awesome, because we actually gained for the week. Okay, we gained for the week in Bitcoin terms. And that's really what we mostly care about, right? Because the whole system revolves around Bitcoin. So we count our profits in Bitcoin, unless we're sitting in Bitcoin. And then we don't have a choice but to count our profits in dollars or losses, right? which happens. But right now we're in Ethereum season, so we're counting our profits against Bitcoin, and we're accumulating Bitcoin, if that makes any sense. If it doesn't make sense, then write me and I'll send you in the right direction. I'll send you over to the webinars so you can watch them and understand what we're doing here, because it's really, really crucial. But we actually gained for the week. I mean, can you believe this? Doing all this. So this is awesome, and I'm really, really stoked. Okay, this is awesome. So let's look at the rest of the, don't know why that never shows up, because it actually exists. This is the entire crypto market, right? That includes Ethereum, all the alt shitcoins and Bitcoin and everything, right? And for that, well, look, I mean, we're back where we were here. So this is mostly, what this tells us that most of the damage was done in Bitcoin, and that's interesting. Some, of course, altcoins got hit too. I mean, look at that, But it was mostly limited to Bitcoin, most of the damage, right? I mean, of course, you're going to find a few altcoins that got hit hard. I mean, let me look here. The high flyer that we traded recently, and see how Sand held up. Oh, okay, it's already bouncing back. Very nice. It's like still squirreling around here. Come on, you can do it. You can get back up there. Anyway, so the other thing, somebody wrote me yesterday and said, one of the reasons why I signed up for Cryptonaissance is because I want to look under the hood. Why don't you show us the other indicator? And absolutely right. Sorry for the Mickey Mouse voice. Absolutely true. And a lot of times I just want to talk about price action, because the longer term picture in that respect hasn't really changed much. But I do often talk about it, but maybe you forgot, or maybe, I don't know, maybe that's something people want to look at when these things happen. So let's walk through that real quickly. So one of the things here that we're looking at when it comes to switching the system off and on, right, is net unrealized profit loss, NUPL. And NUPL basically unrealized profit versus unrealized loss. Here it's explained down here at the bottom. Difference between, when you take unrealized profit stuff that you're holding, right, and that you when you get change back, or if you purchased Bitcoin, or in this case it's Bitcoin, and then the unrealized loss, right? If you incurred loss doing that. So profit versus loss. The better way in my mind to calculate it is to take the every value, every Bitcoin in the market, and take its value, right? Add it all up, and then divide it by the market capitalization. That's another way of doing it, and that's more intuitive, because it tells us what the profitability is of the average person. And if it reaches up here, right, if you go to 1.0, okay, it's not on the chart, but I'm drawing it, that would suggest that every single person holding Bitcoin, in this case it's what we're trading, right, would be in profits. And so that gives us a good sentiment indicator. Makes sense, right? Of course, it never gets there, because once it gets over like 0.8, things get squirrely, and then, usually correction happens, or quick wipe out, cutting it all in half, and then we go merry on our way again. Okay, so that's what we're looking at, and as you can tell, we're not even near that. We weren't even near that in earlier this year, before we kind of wiped out, and we went all the way down here, and that's just, when we looked at that, we knew right away that it wasn't the end of the bull market. And we were right, because we actually painted new highs after that. And same thing here. And what's actually kind of interesting is, and I wanted to kind of point that out, that we actually got another correction, a little wipeout, and we got it at a threshold that it wasn't anywhere near this. And I found that interesting. So obviously the switch on, switch off, absolutely unrelated, but in general, right, we're not even anywhere near where we're thinking about switching Cryptonaissance off. Okay, just as a general observation, right? We're like somewhere around 0.5-ish, something like that here on this one. Okay. So far away, we're good to go. We're good to go probably all the way into next summer, Okay, so one thing here, I wanted to show you this chart, and for some reason it's not popping up, and I don't know why. I have no idea. I just pulled it from my data feed, so I don't know what's going on over at Glassnode. And we do have a subscription, and I have to reach out. I think they might have changed their offering. They keep reducing it down. That's how they kind of suck you into paying more, and it's not cheap to begin with. But I've got the data. So let me pause this and pull it up. One second. Actually, I don't think I have to pause it. I can just pull it up here. Here, I pulled it just now from the server, right? And so here, if you're looking, let me show the data actually first. Then we can look at the charts. And what we got here is basically NUPL, and that's for Ethereum, and we're only using NUPL 155 days. Why? Because 155 days is the threshold statistically at which you are most likely to keep your coin, in this case Ethereum, right, out of circulation. You just put it on a hardware wallet, whatever you call it, Trezor or something, and you put it on, into deep freeze, and you won't touch it for extended amount of time. So statistically, that's the threshold they pick. It could have picked 150. It's very close enough, but 155 it is. So we're only looking at activity that basically happened, right, 155 days or less. And when you're looking at Ethereum tokens that have been in circulation during that time, have been moved, then we're getting these types of, in terms of profit loss, it's the same measure, right? We're getting the same data here. And the thresholds are slightly different. Our cutoff points are different. I just want to give you a quick view here. We were actually in Ethereum mode. We need to be above here. I think the threshold is 0.2. And I don't know. I don't want to draw a line here now, but maybe draw a line. Okay, draw a line, Mike. So something like this. Yeah, a little bit higher, I think, actually, if I remember correctly. That's when we're pushing into altcoin season. Below it, we're in Ethereum or Bitcoin season, and we'll talk about that in a second. But we're not. So right now we're down here, and we're kind of swirling around here in the center, above zero. And so far, there's really nothing to say or to do. And this is the latest data, so absolutely. Yeah. And there's really nothing that suggests to me that there's anything extraordinary going on, to be honest. We didn't hit any extremes, and we were already in Ethereum season, but also here we're not really at really lows or anything like that. So I don't see a lot of very, very bearish sentiment in that respect. Now, people are not pulling off their Ethereum in mass and holding it over the last week or two, So this is really, I think, related to what I spoke about in a little bit more detail before, where I spoke about, the whole generational thing, and more people from a trading background are coming into the market. So a few more things here. That's something we're not considering usually in the market. In trading when it comes to Cryptonaissance. This is the SOPR, spend output profit ratio. That's more of a ratio between profit and loss. Basically, that's actually was related to what I said before, like the realized value divided by the value at creation. Right. So if you're taking the realized value when you just buy something, I'm sorry, I need to have a little sip here. You buy something, you get crypto back, and then the value that's right now. Let's say you bought it at 50,000, and it's worth 40,000. You lost 10,000, so that's minus 10,000, right? And you compare it with the value of that token at creation, right? In USD terms, then you're getting you can calculate this ratio, and that basically gives you this dynamic here. And I found that very fascinating. That's a really good indicator. And basically for me, in just very simple terms, what this reflects to me, if the signal mostly stays below that one threshold, right? Ratio below 1 means that we're in a bear market. Ratio above means that we're in a bull market, right? And here we did hit an extreme point here, as you can tell. And so we kind of snap back here. But if we zoom in, let me hide the drawing, zoom in a little bit more. I don't see here that we didn't drop below. We're good to go here. Actually, let's move forward and see. Okay, we're just at the point here. So we're at the 1 mark, and I think, yeah, I might drop a little bit below, but I think we're gonna probably remain above here and continue. If we drop below and this starts turning into this, right, where we are kind of dropping below, then we might be in for a bit more pain. It's possible. I don't see any indications for that yet, right? And eventually, if this would get any worse, then we start dropping below, and this actually starts, if we don't keep popping above, then these are early indications that we're actually in a bear market, and then I will report back if we see this. But I mean, we're like light years away from that. Okay, what else? Okay, what we got here? That is that's like a z-score. Okay, it's also related to similar. It's basically fair value of the market. And what is the formula? I need to remember. I had it open somewhere. Here we go. That's actually a good indicator. Yeah, right. So it's again market capitalization minus realized capitalization. So it's kind of similar to what we talked about NUPL. Remember that? It's because you can do the same with these two measures. But in this case, what you do, you divide that. So it's kind of like NUPL. Okay. And you divide that by the standard deviation. That's how you get the MVRV score, right? And so the MVR, what does it stand for again? Let me see here. What does it stand for? I have no idea what it stood for. Market value, realized value. I guess that's what it stands for, right? Yeah, get a clue, Mike. Sorry, it's early. My brain ain't working yet. But so here we are, z-score, right? You know what z-scoring is? We're basically standard deviation. Remember, we were dividing it by standard deviation. Remember that? And the formula is similar because it's actually kind of that's the formula, by the way, for doing a z-score on anything, right? You're taking a value here. That would be the value you're taking, like any measure, like rain patterns. Then this is basically the mean right here, right? And then you divide that by the standard deviation, and that's how you calculate a z-score. It's pretty elementary, Holmes. And then you're getting something like this. And so you're getting these outliers here. We're getting these extremes. And again, look, I mean, yeah, here, deservedly so, right? We're dropping into a bear market. And we're not even close to that. So we're like actually in the lower rungs here, okay? We're in the lower rungs. We're here. We're here somewhere. We're here somewhere, screwing around before there's more goodness coming. I'm pretty certain about that. Based on what I'm seeing, okay? I mean, nobody has a crystal ball, but this is a pretty good indication of that. Okay, so one more thing. This chart, that's very simple. This is basically remember when I spoke about whether or not we're in altcoin or not? That was for this thing here, right? Where we are. We have it open. 1 second, guys. Yeah, this, right? We have a threshold around 0.2, and then we decide whether or not we're in altcoin mode or not. Well, we're not right now. We're in Ethereum mode, and rightly so. And this is basically what we decide if we're in either Ethereum or in Bitcoin mode. And clearly, we have been in Ethereum mode for quite a while now. Right? Our system has had it in Ethereum mode for quite a while now, because I can actually show you right here. See that? Cash season, that's from way back. That was during the bear markets. That's based on statistics, and I run statistics and everything. That's how I roll. And see that we've been in Ethereum season for quite a while. These aren't days, so it looks longer than this, but we dropped out of it back when, and mid-November. And since then we've been in Ethereum season, and it's been going very well, because look, again, against Bitcoin, we're gaining. We keep gaining in Bitcoin, and that's exactly the goal of the system, right? I need to kind of like, I was in Star Wars, that carbon plaque, with that Han Solo in it. We need something like that engraved. The prime directive of our system is to accumulate Bitcoin. That's really, we need this really engraved on a huge graphite or what was that material? It was some kind of weird scientific sci-fi material, but yeah, you get the idea. We need something like, something massive somewhere where we have this ingrained, because that's really our prime directive. We drop it in the desert somewhere, right? I'm thinking of, what was that movie with the monkeys and everything? 2001, right? Okay, if you're sci-fi buff, then you know what I'm talking about. I think my mind is going wild here now, but you get the idea. Something permanent, like to make that mission statement for us, because that's really what we want. That's really what we care about, right? We want to accumulate Bitcoin as much as possible. That's a long-term goal, and we're well on our way. And I think the system did exactly what it was supposed to do. Exactly what it's supposed to do. It cannot insulate us from these nutty swings, but it can just keep us in the instruments that keep us out of harm's way, and hopefully produce profit for us over the long term. And I think the system is doing an excellent job of doing just that. That's what we're doing. We actually, this week we gained a lot of Bitcoin, and that's just fantabulous, right? All right, I think I've tested your patience enough. I hope that answers some of the questions in terms of the measures we use. I could go on here, but in terms of actually, there's one thing I could show you. Let's drop back here real quick, and actually, before I let you go, let me open another window, and how I'm going to do this. Yeah, I'm just going to do it here. I'm going to look for futures, liquidation. I think it was liquidation. Yeah, that's actually what I wanted to show you. So we don't have too much data yet, but I wanted to wrap this presentation up with that, because this is kind of interesting. So I don't know, there's not too much data yet, but I just wanted to show you what happened here, okay? Because I spoke to that at the beginning of this video, and I said to you that there was a lot of deleveraging that happened, and here you see the scope of it, right? I don't have it in billion-dollar terms. I'm not sure exactly. I think 275 million have been liquidated, right? That's massive. Okay, that is really massive. That's a massive amount for this market, at least. And it really thwarts pretty much everything we've seen over the last few weeks. Right? I wish we had more data points here. Unfortunately, we don't. Yeah, that's all we get, I think. Yeah, but just to show you, this has been going on, and then boom, this is really like a massive liquidation. It's a massive liquidation, and it is cleared out. It really cleared the plate a little bit, so to say, and that's good. It's healthy. It's healthy. It also, I think it's healthy in general for the market, because it also prevents the market from getting too over leveraged, and that in turn would lead to these huge flash crashes. I mean, a huge flash crash where maybe would wipe out 2/3 of all Bitcoin. And I mean, this was fairly deep, but this is a learning experience, and I think this is healthy actually for the market as a whole. Because we're playing the swings for now, but over the long term, right, we want things to start normalizing over the next year, 2, 3, 4, right, whatever. So as we accumulate, at some point, hopefully, we're getting out of this roller coaster, and this is part of the process, right? This is part of the process, because right now this is still kind of the Wild West. Okay. Anyway, I think I'm going to wrap it up here. This is a pretty good point to wrap it up. Kind of show you this is basically what happened, and what I showed you on the Bitcoin chart is the result of that. And that's that. That happens. This probably will happen again. Be prepared for that. System did its job, and we're actually in good shape. I think that's all there is to be said. And enjoy your Sunday. I'll talk to you soon.